So VWAP is a great indicator for trading in all markets. The VWAP is a trading indicator which averages the closing price during a given time period. At the same time, it puts emphasis or weight on the periods of higher volume. So in other words, it gives that price in that time frame, that one little thing, a little bit more weight. So it's like a weighted moving average. VWAP stands for volume weighted average price. So again, if we were looking at a 5 time frame moving average, a simple moving average, we would take 5 time frames, 4 time, 3 time, 2 time, 1 time close, add them together, and then divide it by 5, and that would give us our moving average. A weighted moving average would give more weight to the most current price. So in other words, even though you had frame 5, frame 4, frame 3, frame 2, and frame 1, what they do is 5 frame times back, they might say, okay, we're going to add that, but we're going to take off 2%, and then we're going to take frame 1 and add 2% to that. So you still end up with 5 weights, but it gives more weight to the most current price. In VWAP, they give more weight to whatever price is based on an increased volume, because increased volume tells you that more traders are believing in that price movement. Now, the standard with VWAP is if price is trading above the or below the VWAP average, that presents you a buying opportunity. Likewise, any price movement above the VWAP is seen as a selling opportunity. So VWAP is the moving average is over top of the price. Okay. So you have VWAP. Let me just put it up here. You have price moving here, and the VWAP comes above it. This is a buying opportunity because it's expecting price to come up here. If VWAP falls below it, it's a selling opportunity. So likewise, VWAP is usually seen as a selling opportunity by professionals. Any price movement above the VWAP is a selling opportunity, and any price below it is a buying opportunity. So below VWAP, buy. Above VWAP, sell. Buy, sell. Because what's happening is when it's above VWAP, you have aggressive buying, so the profitable trade will be to sell. Okay. Let me just get my markings up here for you guys. Okay. The VWAP indicator is classically an intraday indicator that begins its calculation on the first print of the day and ends at the close of the session. However, the indicator can be plotted in a daily, weekly, monthly, or quarterly time frames, which makes it applicable for swing trading and position traders. You can include multiple time frame analysis in your trading, significantly increasing your chances. So you could build a VWAP in a 15-minute chart, build a VWAP in a 30, and a VWAP in a 1 hour, and use those 3 lines across your chart at those prices to get a better trading opportunity. Each time frame is a call to action to different types of traders, and plotting and trading of multiple time frames, confluence zones, allows you to pinpoint the best action areas in the chart. So let me give you an example to help you trade better. Here's how X, Y, and Z stock traded between 1430 and 1435 on a given day. So we had the high, the low, and the open and the close at 230, 231, 232, 233, 234, and 235. The data is quite simple to understand. For example, at 1432, which is, let me put my marker on here for you again. At 1432, the price was 983.1, and volume was at 2475. It made a high of 98, 983.95 and a low of 983 and closed at the minute at 983.1. Very simple. You know how to read the prices. This is just standard price. We haven't done anything with it at all yet. Now, what we do in order to calculate this, we take the typical price, which is the average of the high, the low, and the close. So in other words, we take the high, the low, and the close. We're not concerned with the open. We add those three together and then divide it by 3, and that will give us the average or the typical price in that time frame. So once we have our typical price, we have to look at the volume price. We get this price by multiplying the typical price by its volume. So we come back here and we take our typical price, which would be 983.95, 983.1 divided by 3, and then multiply it times 24.75, which was the volume. Okay. Now, this is a cumulative number which we got by adding the current VWAP to the previous VWAP, which is the total. So we would then take the VWAP from the current time, the previous time frame, and add these together. This again is this will give us our VWAP total. Okay. Now, for VWAP, we get the VWAP number by dividing the total volume, the total VWAP by the total volume, thus resulting the number indicates the average traded price weighted by volume. So we take the total VWAP, which is a cumulative number we got by adding the current VWAP to the previous VWAP. Then we need total volume. This is again a cumulative number that we got by adding the current volume to the previous volume. So we would add 35.69 and 24.75 together to get our total volume. So now we have our total VWAP and our total volume. Now we get the actual VWAP number by dividing the total volume into the total VWAP. And the resulting number indicates the average traded weight by volume. Okay. It's not that complicated. With a little calculator, you can do it relatively quickly. But you don't have to do it because all of the charts do this for you. It drops it on. But here we can actually follow it across. So what we did is we started at, we're at 1432, and we have 983, 982, I'm sorry, 983.95, 983, 981. We have volume as 24.75. So we get the typical price by adding this, this, and this together and divide it by 3, and that gives us our typical price, which is 983.35. Then we have to get our typical volume. Our volume for this current trading period was 24.33.791. We add that number to the previous number, and that gives us 8,456,000 whatever. So our total volume is just, it becomes a decimal, 8630. Now we take the total volume and divide that into the cumulative of this and this, and we get 983.26 for our VWAP. So our VWAP is 3 points higher in this current time frame. Follow me? 983.95, 983.1 added together, 1, 2, 3. and we have 983.35. Now we take the current volume. Let's go back to the formula. We'll walk you through it. So what we have is now we've achieved our typical price. Now we want our volume price. We get this by multiplying the typical price with its volume. So we now take this price times this price. So we take our typical price, we take our typical price and multiply it times our volume, which gives us our total VP, our total volume price. Oh, look backwards. So we now have our total volume price. This is the cumulative number, which we got by adding the current VP to the previous VP. Then we get our total volume. This is the cumulative number, which we got by adding the current volume to the previous volume. And then we divide it into the total number. So we take 6155, add 2475 to that, get 8630. Divide that into our total volume price of 8485561, and that gives us what? 983.26. It's just a standard mathematical calculation. One more time, because people are asking questions here. 983.95, 983, 981. Add them together, divide them by 3, gives you 983.35. Our current volume is 2475. We multiply 2475 times 983.35 and we get 244791, which is this calculation times that calculation. We add this volume price to the previous volume price to get the new total volume price. We then take our current volume, which is 2475, add it to the previous volume, which is 6155, which gives us 8630, and we divide the total volume price by the total volume, which gives us 983.26, or our new VWAP. And we put that dot on the chart, connect it to the previous dots, and get our weighted moving average line on our chart. Now, VWAP is an intraday indicator used in, and you can use it on minute charts. Often when you plot this, you will notice a jump at 9:15 a.m. when compared to the previous day's data. Ignore this jump as it means nothing. VWAP is an average, and like any indicators employing averages, this too lags the current market price. VWAP is used for two main reasons. It gets a sense of intraday direction and to get a sense of the efficiency of order execution. If the current price is below VWAP, then the general opinion is that the intraday trend is down. If the current price is above the VWAP, then the general opinion is that the stock is trending higher, or the asset. If the VWAP lies in between the high and the low, then the expectations for the stock to remain volatile. If you intend to short a stock, then it is considered an efficient fill if you short the stock at the price higher than the VWAP. That means you would sell the stock. Likewise, if you intend on going long or buying the stock, then it is considered to be efficient to fill it if you go long at a price lower than the VWAP. Now, VWAP starts at the open price and then moves up and down based on the price movement. Now, when we say 9:15, that's because the U.S. markets start opening at 9. You have to take in effect, if you're using the Nikkei, because the markets tend to jump when they first open in the morning or fall, depending on what happened overnight. So you have something out of whack for a minute or two. So don't start that quickly. Start after, give the open of the day 15 minutes to take a breather. VWAP eliminates much of the noise seen in a stock throughout the day, even more so than a moving average would. At the start of a day, the VWAP is more sensitive to price moves, but as the day progresses, it becomes less so. This is because it's based on cumulative values. So as these values get larger towards the end of the day, each new piece of data has less and less effect on the VWAP. When the price is below the plotted VWAP values, the trend is likely down and therefore is a downward bias to the trading day. Institutions look to buy will often try to buy when the price is below the VWAP, as they are able to accumulate a position at the better than the typical price. Short-term traders usually do the opposite, interpreting the price below the VWAP as bearish and looking for short positions. When the price is above the plotted VWAP, the trend is likely up, or there is an upward bias to the trading day. Institutions looking to sell or short will often try to sell when the price is above the VWAP, as they are able to accumulate a short position or dump shares at a better price than what was typical so far in the day. Short-term traders usually do the opposite, interpreting the price above the VWAP as bullish and look for long positions. VWAP is a guide and a source of price information that reduces market noise. It does not provide entry signal, stop losses, or target prices. Okay. So of course a VWAP has to be used with other things, but VWAPs are very heavily used by institutionals. This helps you understand when an institution, hedge fund, or a Goldman Sachs is going to be accumulating buy or sell positions. So you can take advantage of when they're buying, which is going to push up the markets, or they're selling, which will eventually push down the markets. Okay, so we see the difference here. So when on this chart, we can see how an institutional would be looking at the VWAP. So we see the purple line and the VWAP, which is the VWAP line, and an institutional would sell or short sell a transaction above the VWAP. So as price moved above the VWAP, they would be looking to sell. Okay. If an institutional buy order occurs below the VWAP, especially at the end of the day, this is considered a good trade for the day's price action. Now, we are looking at this VWAP underneath. So an institution would buy here at its peak, would be selling at this peak, where a short-term trader, on the other hand, would look at it differently. As it's the same price, the same movement. When price moves above the VWAP, but then the VWAP starts moving through the price action, indicates sideways price action. Okay. So a retail trader would wait for the price to break above the VWAP, and he would be buying because he's buying into that short-term sell, because he knows that short-term, that institutional is going to sell at that top. So you would be buying it above the VWAP and getting out or getting ready for the institutional sell order and get out at that point. So on strong trending days, the price will be above or below the VWAP for much of the day. On range trading days, the VWAP will run through the middle of the price action, showing the overall sideways direction of price. This can help retail traders determine what type of strategy they should be utilizing, trend strategies or ranging strategies. Because as a trader, you should have a group of strategies and trading plans set up for yourself, and you can call these a volatile market, you call some for uptrending market, because you have others for downtrending markets, you have others for consolidation markets, you have others for range trading markets. And once you can determine what type of market situation, you can then apply the right strategy. And VWAP tells you what type of market you are in at the moment. Now, unlike a moving average, which is commonly used in a development of trading strategies, the VWAP is more of an analysis tool than a trade signal tool. It provides a basic guide for whether there's an upward or downward bias in price. But the actual VWAP line isn't likely to provide consistently good trade signals. This is mainly because during strong trending moves, the price is unlikely to touch or even come close to the VWAP. Later in the trading day, the lag in the VWAP becomes significant. This is because so much data is already being computed into the calculation that new data points have little effect. Therefore, VWAP is of more value at the start of the day to retail traders because it is so responsive to price movements. On the flip side, at the end of the day, the VWAP will flatten out and will be of little use to the retail trader. The end of the day, VWAP values are more important to the institutional trader though, since the end of the day VWAP value gives a benchmark that the institutional compare to their transactions to. The bottom line is VWAP gives the typical price of a stock so far in the trading day based on price moves and volume. It's an intraday indicator starting with the first period based on the time frame chosen of the day. So in other words, you wipe VWAP out from the prior day and you start your accumulation of the volumes and the prices for the new day. And it's an intraday indicator starting with the first period based on the chart time for the frame chosen of the day and ending with the last. VWAP doesn't provide trading signals like many other indicators. It's an analysis and benchmarking tool. Now, I put you in your handouts a whole analysis of a current chart and how you would be using VWAP, including in your other things to make a price determination and a trade determination. But VWAP by itself isn't giving any of these. It's giving you benchmark or telling you what the price should be, what the benchmark is of that for this trading session. Now, I don't make any mechanical trades off of VWAP, but one I think you can make is a buy during the first retracement of VWAP after a strongly trending stock makes a new high of the day. Reverse for shorts. You could also use this as a profit target if, for instance, you bought a stock on a fade at the lows and are wondering where to take the most of your sells. VWAP is likely to be a source of natural selling pressure, so I would lighten up there. Okay, now making it work. The chart here that I show, I tend to use VWAP, which is more to give a straight insight into how a stock is trading. If a stock is chopping back and forth on both sides of the VWAP, obviously VWAP is not really significant, so I can safely ignore it. But look at the chart of Amazon here to the left and note there was selling pressure at the VWAP each time price touched, and then finally those sellers lost the battle and the character of the stock was completely different. So you can see the selling at the VWAP line. So here the markets are selling in. When price breaks above the VWAP, it's a selling opportunity. But then the characteristic of the VWAP showed that the market was making a complete change, and we ended up in an uptrend reversal, and VWAP continued up and price stayed above the VWAP level. There are lots of ways you could use this information, but if you were short and pressing shorts, the momentum through VWAP should have warned you that you were fighting on the side of the losing army, because as price broke above the VWAP, you should be looking to sell. So because price is moving, you're not looking to say, you would be looking to exit the market if you had already sold. So if you had sold at these selling opportunities and you were still sitting on assets in a sell position and it came back up the VWAP and broke above, it's telling you, get out of that asset, get out of that stock. But you have to learn to interpret. But VWAP is not very complicated, and it's a very good indicator to give you information. When the price goes above the VWAP indicator, this means that the strength of the bullish move is strong. It is so strong that the price has managed to break its average value on the charts. Therefore, we get a long signal. The same is enforced for a bearish breakout, but in the opposite direction. At the same time, if at the end of the trading day, the VWAP is smooth, but visibly inclined, this speaks of a strong trend. So here you can look at the image right here. The trading day starts with the usual VWAP dynamics due to the initial short amount of time periods. Later in the day, the indicator is already smooth and still inclining downwards. This means that there is a strong downtrend. And we can see as the VWAP smoothed out throughout the trading day, but continued in a slow decline, look at what happened to price. Price was in a downtrend. It is telling you that that downtrend is very, very strong. Now, support and resistance with VWAP. That's one of the things that VWAP is extremely good, giving you a support or resistance line. So the volume-weighted price could be used as a support and resistance for the price action. Since the indicator averages the total periods of the day, it has psychological meaning on the charts. If the price approaches the VWAP line from below and starts hesitating in the area, then the VWAP may be considered resistance. If this happens in the opposite direction, then the indicator might be considered support. And look at how pretty this support is of this whole price movement here. Every time price came up above the VWAP, it came back and touched that VWAP and bounced off of it. Came back down, bounced off it, came back down, bounced off it. So the VWAP was actually working as your support line in his uptrend, holding prices above the VWAP. So it gave you a new way to interpret support and resistance. Okay, if price increases a lot after a bullish breakout through the VWAP, this could have a different meaning. If the price goes way above the VWAP, yes, it means that the bullish trend is very strong. However, if this happens for a short period, it also means that the price is way above the average value, and it might be time to decrease or reduce your holdings or look to short the market. The opposite is enforced for bearish breakouts in the opposite direction. This acts as the same way in an overbought, oversold indicator from the oscillator. On the average above, we observe a sharp price rise through the VWAP. So we can see this right here on my little chart. So we have a price trend moving up. We have our VWAP average coming right here. Now what we got was a sharp rise in price and then a retreat. And where did price retreat? It retreated right back down to your VWAP support line. So it told us when price, it couldn't tell us that price was going to top out here. Other things would have told. But when we saw the breakout and the movement down, we could have predicted some type of reaction to this VWAP support level. And what we got was a bounce up, came back down to VWAP, and then stayed above. So it's been holding. The downtrend never was able to take hold. So we only had a small correction and then moved back. Even though we didn't move back to a strong uptrend, price still moved back up. So the VWAP is a good tool for measuring relative strength. However, like many market signals, you may want to combine it with other technical indicators. Not may, you need to. VWAP on its own is not a good indicator, but VWAP combined with other indicators give you confirmed buy and sell signals. Do not use VWAP independently. VWAP independently will tell you if the market is trending up or down and give you an average price, but it's not going to give you open and close buy and sell positions. Okay. So in this case, we have a second indicator on the bottom of the chart, and we're using MACD, where we're using the crossovers to confirm our price above VWAP and giving us specific buy and sell signals. So we have a use of candlestick support lines and VWAP and MACD below, giving us a strategy that works well together. But you can use this with RSI, you can use it with stochastics. It's up to you to decide how to put it into a trading strategy. Okay, we always skip the market opening. You start your calculation, but don't make any decision because the markets have the pent-up demand overnight, and they're also clearing out early morning buy and sell orders. Since the prices do crazy due to very high trading volumes, we get our first signal when the MACD lines do a bullish crossover. Minutes later, and the price switches above the VWAP line. So what we get is here the long signal, and we get our buy signal, and we would buy here. The price then decreases to the VWAP and tests its support. The line sustains the price action, and we get a bullish VWAP breakout. A couple of time periods later, the MACD does a bullish crossover, and we get our two long signals. We buy and we stay in the trade for 25 periods until the MACD gives us the bearish crossover. These two trades would have generated a profit of 1.04% for less than an hour of trading. In summary, VWAP is a great technical indicator because it accounts for both price and volume. Unlike moving averages, VWAP assigns more weight to price points with higher volume. This allows you to understand price points of interest, gauge relative strength, and identify prime entry and exits. So VWAP is a great indicator to start using. And I'm going to pop up some charts for you right now. And I've given you in the handouts and given you a whole explanation, but I've got another chart, live chart I'm going to pop up here for you now. We'll take a look at it. So this is the actual chart I gave you in the explanation. And we can see the VWAP in the purple line on the charts. Okay. And we have two other VWAPs from previous calculations, and we're using our candlestick patterns to make a determination. So putting on your VWAP. So I'm going to go delete my VWAP from here. So now we have simply price action using candlesticks. We would go up here to our indicator and scroll down to VWAP. Right here. And we've now placed it on the chart. I will format it into an easier to see color for you. We're going to make it red, and we're going to make it very bold. So now we can see our VWAP moving on our charts. And so it's very easy to put on charts. You know what the calculation is, but you don't have to do the calculation. And you would then be able to look for buy and sell signals now, remember this is way back here. We're only concerned with where price is at this point. So we see that the price is holding below VWAP, but look at this candle as price fell and recovered, and look at the relationship to the VWAP and the candles close to the wall. And when we're underneath the VWAP, this would be giving us a buying opportunity to buy the price to go up. We didn't have any really break aboves, but again here above we would have a sell signal to sell into the market. Okay, and then when it fell below the VWAP, we would be exiting the market. But it's very easy to add it to your charts and use it in very conventional ways. So if you simply combine this by adding MACD or RSI onto the bottom of our charts. So let's add MACD on here. So now we have MACD put directly below here. So we're seeing the convergence and divergences in conjunction to the fall below or above the VWAP to give us buy and sell positions. So together they work extremely well. Now, one easier way to use all this is if you're using TradingView charts or you're using some of the standard strategies we're going to go back down here to MACD, and we're going to click on here, MACD strategy. And all it's doing for us is putting on the charts buy and sell signals based, you can see the little arrows here, based on the crossovers on the MACD, so you don't have to sit here and look for them. So we see there's a buy signal here, a sell signal here. See the little arrows? And it's put straight on the charts for us. And we would want to use those in conjunction with our VWAP to see if they're both working together, because we don't want to simply use the MACD. And when they do correlate together, we might want to institute a trade. So these are just some ways that you can use VWAP. Use it to build into your trading strategies, use it to verify your decisions, or use it to give you indications on how a market is moving. So thank you very much for joining us tonight. Have a great trading day, and we'll talk to you very, very soon again. Good night now.